Hello, listeners. Welcome to the pre-market update, powered by AI. I'm Joe.
And I'm Sarah. Today is March 9th, 2026. Let's dive into everything moving Indian markets today.
Let's kick things off with a look at the Indian markets. The Nifty 50 and the Sensex are set for a challenging start today. After yesterday's close, where we saw some resilience, the GIFT Nifty is indicating a gap-down opening. It's trading around the 23,800 mark, which is a significant drop of about 745 points from the previous close. This suggests a bearish sentiment that could weigh heavily on the benchmark indices. Sectorally, the Nifty Bank and IT indices will be in focus. Given the global turmoil, we might see heightened volatility in these sectors. In terms of futures and options, the put-call ratio, PCR, has been hovering around the 0.85 level, which indicates that the market is in a cautious stance, with traders possibly hedging against further declines. The open interest buildup shows significant positions in the lower strikes, pointing to a defensive strategy by market players. Yesterday, FIs were net sellers to the tune of about 1,500 crore rupees, while domestic institutional investors, DIIs, bought approximately 1,200 crore rupees. This tug-of-war between FIs and DIIs is likely to influence today's market dynamics, with FIs seemingly cautious amidst global uncertainties.
Turning our attention to the global markets, there's quite a lot to unpack. Overnight, the U.S. markets closed lower, with the S&P 500, Nasdaq, and Dow Jones all posting declines. The escalating conflict in the Middle East has pushed crude oil prices over $100 per barrel, and this spike is rattling global equities. For India, this means potential pressure on IT and pharma stocks that are heavily reliant on U.S. markets for revenue. In Europe, indices like the FTSE, DAX, and CAC 40 also saw declines, reflecting the broader risk-off sentiment. Asia is no different. The Nikkei 225 fell sharply by over 6% as Japan grapples with the oil price spike and its economic repercussions. The Hang Seng and other Asian markets are similarly under pressure. The US dollar to Indian rupee pair has reacted to these developments, with the rupee weakening against the dollar, now trading at around 83.50. This could impact import-heavy sectors adversely and also affect foreign institutional investments. Commodities like gold and silver, which typically serve as safe havens, are also seeing movements. Gold has slumped due to the stronger dollar and fears of higher interest rates, which could be a double-edged sword for investors in commodity-linked stocks in India.
Now, let's delve into some major corporate stories shaping the Indian landscape. First up, Reliance Industries announced a significant contract win in its oil and gas segment, valued at over $1 billion. This is expected to bolster their earnings outlook, though the rising crude prices might temper some of this optimism due to higher input costs. Meanwhile, Tata Motors reported a robust quarterly performance, beating street estimates with a 15% increase in net profits, driven by strong domestic demand and a recovery in its Jaguar Land Rover business. However, they did caution about the potential impact of rising raw material costs. Infosys, on the other hand, faces headwinds as the U.S. market slowdown could impact their revenue growth. Analysts are closely watching their cost optimization measures. In regulatory news, SEBI has issued a circular tightening disclosure norms for large corporates, aiming to enhance transparency. This is likely to be viewed positively by investors seeking more clarity. Finally, we have an IPO update as well. A mid-sized tech firm is set to launch its initial public offering next week, with a price band that indicates a valuation of around 3,000 crore rupees. This could be an interesting opportunity for investors looking at growth stories in the tech space.
On the international front, there's significant news impacting Indian markets indirectly. Apple has announced a strategic partnership with a major Indian electronics manufacturer to boost its local sourcing and production capabilities. This move aligns with India's Make in India initiative and could influence investor sentiment positively towards tech and manufacturing sectors. In Europe, Volkswagen's ambitious electric vehicle rollout has hit a snag due to supply chain constraints, which could ripple through to Indian auto component suppliers heavily reliant on European exports. Meanwhile, in China, Fosun International's warning of widened losses due to impairments has spooked investors, causing a sell-off that might impact the sentiment around Chinese-linked stocks in India. On a more positive note, Samsung's plans to expand its semiconductor operations are seen as a bullish signal for the tech sector globally, including Indian tech stocks that are part of the supply chain.
Let's shift gears to macroeconomic developments and policy updates. The Reserve Bank of India is maintaining its cautious stance amid the current global uncertainties. Recent comments from the RBI governor suggest that while inflation remains within target levels, the central bank is prepared to act to stabilize markets if needed. This comes against the backdrop of persistent inflationary pressures due to rising oil prices, which are a double-edged sword for India's economic landscape. The recent CPI data reflected a slight uptick, primarily driven by higher food and energy costs. The U.S. Federal Reserve's hawkish tone on interest rates is also something to watch, as it could influence FII flows into India. On the fiscal front, the government has reported robust GST collections, which provides some cushion for fiscal deficit targets. However, geopolitical developments, particularly the ongoing tensions involving Iran, could impact trade routes and energy supplies, posing risks to India's current account deficit, CAD. Investors will also be keenly observing any developments on India's trade agreements that could mitigate some of these external pressures.
To wrap up, let's distill today's key takeaways for investors. The Indian markets are poised for a cautious start, with the GIFT Nifty indicating a significant drop. Watch out for sectors like banking and IT, which could experience volatility due to both global and domestic cues. With crude oil prices soaring above $100 per barrel, energy stocks could see some action, but the broader market sentiment might remain jittery. Keep an eye on the rupee's movement, as a weaker rupee could impact sectors dependent on imports. Investors should also note the RBI's stance as a balancing act against inflationary pressures. As for stocks on the watch list, apart from Reliance and Tata Motors, keep an eye on Infosys and the upcoming IPO in the tech space. Finally, any news on the geopolitical front, particularly in the Middle East, could further sway market sentiments. Overall, it's a day for cautious optimism with a focus on risk management.
That wraps today's pre-market update. Hope you found it useful heading into the session.
Drop your thoughts in the comments and follow us for daily updates. This is Sarah
And Joe, signing off. Happy trading.